Hello, this is a group dig by. In last 2 week practice round, I think our overall performance needs to improve in comparison with other competitors, as we should make some adjustments from our strategy to figure out some particular problems.
Yeah, what problems we
The first main issue is our accumulated profits. As you can see from the report, we got only negative figure within our groups. The most likely reason would be we phase out our traditional line so quick at the very beginning. As a result, we ran our enough cash flows to operate and invest in high-tech parts. Also because of this, our market share is relatively low, which is only around 10% in the industry. The second main issue is our contribution margin is about 29.7%, which is lower than 30% industry requirement. This might be caused by the high cost in direct material and labor, and also I think from the excessive expenditure in marketing, promotion, selling, which also bring down our total profits. So I think we could raise price or reduce costs should be considered in our following practice. Last main issue is from our inventory. That's a big problem, especially in performance part sensors. We sell only about half, and nearly half of the inventory we keep on the hand.
Yeah.
Too much of this inventory, of course, keep to add additional cost and bring down our profit in the end. So we should make some adjustments through this practice round. So what do you think from the RD department?
From R&D, I do recognize we made a mistake by selling the traditional segment too quick. So we lose the cash cow to actually generate enough revenue for us to keep investing for reinvestment purpose. But do you think it would be necessary to bring back to for the production again?
I don't think so. There's no need to bring them back because this will induce a lot of cost which is not necessary. So we should forget that and move on.
Okay.
And also we more focused on the high tech part.
Yeah.
If we keep because we still, even we phase out the traditional one, we still have the low end one.
Yeah.
We still can do the production to keep the profitability, to get enough cash flow to reinvestment in the high end sector. Maybe just keep this one, should be fine. Yeah.
If you have money to buy the traditional bag, why not to focus on the high tech apartment?
And we indeed benefit a lot from the sale of low-end products because our company's overall market share has improved a little bit and mainly contributed by the sale of low-end products.
Yeah, exactly. I forgot to mention that. Yeah.
So low-end, we just keep it as it is.
The good thing is that last practice round we sell all the low-end products. No inventory.
It makes the customer satisfaction.
Yeah.
Okay. But do we need to still improve the low-end product, just from the R&D perspective?
I think there's no need to improve the product itself and keep the current level of production because we need to control our cost.
Reduce the cost
for the low-end products.
Yeah.
Because remember what our strategy tells us that the low-end products will gradually phase out. So I also have a question. Which is the proper time to phase out our low-end products?
So I guess if still keeps making money for us, then we keep it. But because you know how the industry is not really like in the growing demand, it's quite stable, so the demand might decrease in the future. Even now we sell all our inventory, but who knows what's going to happen in the next round. So we'll wait for another round to see how it goes, and then we will decide when to phase out, when it's not making much money for us.
Yeah, I agree with that. From another thing, our competitors, there are some two groups also focusing on the low end.
Yep.
In the end, the price will be much lower, and then we may we may do additional cost, and the profit margin will be lower. I think a good time is we phase out low end. It's when we get stable market share in the high end. At that time we phase out. Yeah.
Okay.
Yeah.
And from a marketing perspective, because also as COCO said, because the performance is average of all the groups, and our material cost actually is relatively lower than our competitors. I think it's it's a good time for us to raise price up by 50%. Sorry, raise price by 50 cents,
Yeah.
which is still lower than the average in industry. It will be much appealing for the customer to choose our products, also to increase our contribution margin to 30%, because currently our low end segment is only like 28% of contribution margin. That's a bit dangerous signal. Yeah.
Okay. So for the high end, just feedback to our strategy. The high end performance was average above, and the size is a relative small, and MTBF is quite high. And we actually have the lowest price in the high end segment. So that's why it's doing average good. And I noticed another group from Group C introduced the product cheese. So it's a quite it's a high-end product with a very excellent performance and a good size, but at a very low price. So I think it will generate great pressure for us to compete in that market as well. Just to FYI, right?
Yeah. From a marketing perspective, last round I think our high-end also sell pretty much well, even though left I think in the stock. And also, the high-end products is the one important factor we mainly focus because of the contribution margin, the highest in our 4 products, nearly 35%. So I plan to, in marketing perspective, I plan to increase our forecast above the benchmark prediction and increase our capacity. In the long-term run, because the profit margin is quite higher, especially we sell off the products, I think it's good for the long run. We keep the marketing share. So to raise price a bit to keep the profitability, and we will invest some of the capital in the promotion and sales budget as well. So what do you think increase the capacity?
Yeah, from the production of high-end products, I agree with you guys, and I mean to keep on expanding our production of high-end products, because the contribution margin is 35%, which is a good sign. Demonstrate its profitability and good market reflection. So, from the last round production analysis, we have not many inventory on hand, so I have confidence in producing more high-end products in next round.
Okay. So I will just follow our strategy to develop incrementally in the high-end product Okay, sure. So it moves to the performance segment. The performance segment is quite actually moving forward, and it has the smallest size in the market, and also it provides the best performance. But it's not really selling good because what's the inventory we have?
Only half.
Yeah.
236 we left. We sell only 280.
So it's only 50% of what we expected to sell then.
So our contribution margin is around
only 20%. That's a problem.
Quite low.
The low is the lowest.
It's very dangerous.
What would be the question? I think from the R&D perspective, I think the MTBF will be a problem. It's quite low compared to the other.
I remember we didn't adjust the MTBF last time, right? We didn't adjust it.
Yeah, I think we didn't do much about it. That might be why it's not really doing well. Because I think performance is all about being reliable and meeting the customer's demand. And in that part, I think we didn't really satisfy the requirements. So I'm proposing to increase the MTBF for the performance segment in this round, and also increase the performance and the site perception map, like moving forward a little bit, just to keep us in the lead position in the performance segment. And any other
the marketing
the performance. For the marketing aspect, I think we didn't do it well on the promotions. The promotions also not very well for the size. We just half, I think, compared to the other competitors, is the half amount. And also the price, I think we make not too high compared to others. We all the same. But just because the promotions we really done not well for those two, so the performance we only sell 288 and keep 2360, 236
Okay.
in hand,
Sure.
too much in hand.
So you think the lack of promotion would be one of the major
The
issues?
most
Okay.
important thing.
Yeah, another reason because our contribution margin why is only 20%. Your contribution margin equal to your sales minus your direct labor plus direct material cost. Yeah, the main problem might be the promotion, and also as COCO said, the MTBF ones, that's added additional cost. Yeah.
Okay. So cool. And for the performance, I just personally have a opinion. Like because I noticed other group are also introducing new products. Then, but it's all based on in the high end segment. So the performance segment, not many people are doing well, and they don't know why. So I'm thinking maybe because of the product is not right for what the customer wanted. So I'm thinking if there's a possibility to introduce a new product in the performance segment, but we can leave that for later.
Okay.
So yeah, move to the size segment. So the size segment is actually doing not too bad, hey. So it has the best performance compared to the other competitors, and also has a relatively small size, and also the MTBF is average above, and which means it's quite reliable, and it's selling not too bad either.
Yeah, contribution margin.
Yeah.
32%.
32%.
What do you guys reckon I should do with my R&D to improve it? Just improve a bit more, or just as usual, incrementally?
Yeah, maybe keep it as usual incrementally because currently we sell pretty much well.
Yeah.
And we only very little stock.
Yeah.
And because customers, every year pass, they want better products, keep it fresh and design.
Yeah.
But for the size one, we need to, MTBF contributes a bit more, maybe from the size.
Yeah.
The performance, I think it should be keep the average for the traditional one. Yeah, same like traditional one. But the size must be adjusted. That's my personal opinion. Yeah.
The size is critical.
How about we just decrease a little bit the price for the size?
What's the price now?
It's 33.50.
33.50.
Yeah.
Yeah, it's like the average price to compare. I checked compare with other competitors.
Yeah.
So you mean to just be the lower price?
Just a little bit, because
Maybe we can have a try.
We can
Yeah, we can try this time to find
what the market locates.
Yeah.
Yeah.
Yeah, it might be the reason. Yeah.
So there's an issue I want to address in that from the perspective of production of our high technology segments, I mean the high end performance and size, we need to keep on expanding the production of these three products because as you can see from the last round production analysis, in fact we have fell behind with our competitors. Like company B, C, and E, for example, B and E have already activated their second shift
capacity.
Yeah.
Yes, and their levels of plant utilization are generally higher than us. So as a result, our market share are low behind the average level of the industry.
That's why I think introduce new product might
Yes, I think
solve some kind of problems.
I think
We only increase our capacity line in hand, but the size and performance we didn't do that. Like COCO said, we might introduce some kind of products, but the price is lower than the high end, but more performance.
so. We need something new to strengthen our market share.
So what do you think when you do the R&D in this kind of product? If we introduce a new one, what do you think the most likely face for the customers?
Because personally, see that's the case. Now the other people, because the high end and the sites are performing like quite good actually. But the performance segment, none of us is doing really well in that segment. So I see there's a possible chance if we can invest as the first person in the the performance segment to like set up our benchmark, and then to introduce a new product, and to also like introduce a very high tech, exciting, and like what the technology people wanted, the performance one.
We also need to introduce a new product, like you said, the performance product, to demonstrate our capabilities of research and development, to make our targeted customers more confident to in our products, so we can move on and get more market share in the high.
We also gain confidence from our investors. They borrow money, and we borrow money from them, and it's also good for the issuing shares.
Yeah, I think so. That would be good for the financial, at least.
You guys just talk about a statistic background of our company. So from the financial department, first we compare with our last round result. Although we make a mistake in round 1, but we have some progress in round 2. Just like the NEC, we earn more customer satisfaction, and also this one, the low end one, also increase our net income as well as the cash flow of from our operations. And we also issued 2,500 stocks last round to support our R&D department to make more improvement of a product, and also increase the promotion forecast, and increase a lot of sales this year compared to the last round. And but our profit is not able to cover the interest of our long-term and short-term debt, because we have a lot of long-term debt in this round, in the balance sheet. So the only net profit is from our low-end segment, and the mainly part of our revenue is to cover the short-term, long-term debt. And this compare with our other companies' performance, we have the lowest return on sales, and which means the low profit margin in our product, and it shows that in our market segment, our price policy is not efficient enough. So we must increase the price, and increase the promotion, and because our strategy is niche differentiation, so we should not focus on we should focus on the premium product with premium price. The price war is not what we want, and we also get the low return on assets, which means the working of our assets and equity is not efficient enough, and also a dropping of our stock price is a warning of our negative profit, and also leverage ratio is a little bit higher, which means we still have much power of explanation of our operation and efficient use our shareholders' equity. So, as I said, we must improve our product and increase the capacity. So, on a financial perspective, we think you should focus on the cash we have, and we should not borrow too much money in this round. We only have to issue shares. It's also the tactics in our strategy. We only can use the stock, the issued stock, to support our cash flows. So
if it is hard to support the 3 products from the high technology segments, I think maybe we should focus only on one product. I mean, high end, all size.
And keep the other 2 remain the same.
Yeah, from marketing perspective, because we only get the second capacity line from the high end, no even like the size and performance, I think it should be fine because if the problem is that we should sell the stock we have now, the inventory. That's a problem because we keep inventory, no cash flows. We're going to sell the whole inventory, and if from next round, if for example our high end performance goes well and we sell well, get fair price and promotion is okay, and we may get enough cash flow, to expand our capacity in high tech or introduce new product. But from the capacity perspective, we can issue shares or long term debts to generate that kind of capital.
And I decided this round in the financial decision we should issue at least 4,500 stocks and remain the long-term and short-term debt the same and not borrow anymore. And in the future round, I think we should figure out which one in the high-tech segment, which one we do best, and we should decide which one we should introduce a new new product.
As a point.
Yeah.
Okay. Just to summarize our solution for the problems we raised in this round, then because we have like a really low profit margin and the cost is quite high, so in order to minimize the cost, we propose to reduce the investment in the unnecessary segments like a low end, like the MDPF or some promotion. As long as they have enough money to keep going and selling, we don't need to invest extra because it's not our main objective. Yeah. So and also try to raise the price of the high end product and the size segment because the price is our customers are not so sensitive to price, but we just keep a moderate premium. And as long as we provide the best performance, and we in terms of the inventory issue, we have many stock on hand, especially for the performance segment. Yeah, so we identify the problem. One is MTBF, one is a promotion. So we increase the promotion, and then we increase the MTBF to make it more reliable and towards what the customer want. So we can sell out more inventory. And in terms of introducing a new product, we don't know which one to introduce yet. So but at least we're gonna prepare for introducing to be more ready to buy more capacity to introduce a new product that is new and fresh and exciting, so can give us a leading position in the market. Yeah, and increase the market share as well. So the low end segment, we plan to phase out when it stops making money for us. So we're gonna wait for another round because we don't know whether it's like not that hot anymore because we sold all our inventory, right? So we're gonna wait for another round to see whether it's still worth investing in that segment. If not, then we're gonna just phase it out and resell the capacity and then reinvest that money to the high end, which we really need to focus on. Yeah. Everybody on the same page?
Yeah.
Cool.
Hopefully we will see the bad result in our
We next back
financial.
around.
Yeah.
Looking forward to your
Sure.
progress.
Thanks.
Okay.